What's up, traders? It's Chris here. We got a new video for you here, stock trading with the VWAP indicator. And I really want to talk about this, giving you kind of something that you will not hear on your typical YouTube video. If you were to, YouTube and search on YouTube for VWAP videos, anybody who's giving you an intro to VWAP, they're probably going to start quoting things from Investopedia on how mutual funds use it to kind of find value. If the market's above it, it's bullish, and if it's below it, it's bearish, and it's overvalued or undervalued. And I'm just going to tell you that some of that, you can't really use that, and it's not really true, and it's not an accurate way to think about VWAP. And so I'm going to tell you from thousands of hours behind the charts and thousands of trades on stocks, what you need to think about VWAP, how you can have actionable ways to use it, and to kind of give you a different perspective on how to use VWAP either for day or swing trading. So what is VWAP? So VWAP stands for volume weighted average price. And so it's an indicator that is really kind of taking the order flow data in terms of volume and time in sales at a particular price. And then it's averaging that out based on all the stock orders and all the volume flows that are on and shares being traded at a particular price. So a simple way to think about this is, if you and I are trading the same XYZ stock and it's valued at $50 and you buy 1,000 shares at 50, and then I decide to buy 1,000 shares at 60, well, we have an equal amount of shares. And so VWAP's just going to average between those two prices because, hey, you're buying 1,000, I'm buying 1,000. That's the flow in it right now. And that's equal weight. And so we're going to smooth out that price. But if you come in at 50 for 1,000 shares and I come in for 10,000 shares at 60, is that an accurate way to smooth that out and even it out? Is that an accurate way to represent what the flow data is in terms of the price action on that stock? No, it's not. 10,000 shares is a lot more volume than 1,000 shares. And so VWAP's going to skew that data to say, hey, I'm weighting it towards this because this is a larger block of sales at a particular price. So that's the way to think about it. It's basically taking the number of shares traded at a price and it's weighting that over time. The important thing, I'm going to give you some actionable takeaways here. One of the most important things you can do in trading VWAP is to marry three things together, and that's price action, volume, and VWAP together. You never want to think about VWAP in isolation because it's not. It's connected to volume and price. And you need to be thinking about how the price action is forming and relating to VWAP. That's important. But then you also want to marry it together with volume. And so you need to kind of put those in a cohesive picture to get an understanding of how you can use VWAP. This is very important when you're trading stocks, to always kind of think about, when you're trading charts, think about what's going on in the price action, what's going on in the volume, and what's going on with VWAP. When you start to marry these three together, you get a much more cohesive picture of what's going on in the order flow behind the market and which is the more powerful direction to take it at that time. So super important. All right, so we're going to look at a chart here. This is actually the VWAP indicator, this little gold line here. And if you notice, you'll often see these kind of jumps in it right here. And that's because it's changing, the market gap's open, and it's changing based on the volume and the price and the sales that are happening at that time. So VWAP's generally considered to be a day trading indicator. There are ways that you can use it for swing trading, which we will get into. The point being, though, is that VWAP today is not important in relationship to VWAP yesterday. Yesterday's VWAP doesn't matter. You just need to be thinking about the VWAP today. So you can't look at, oh, well, this was VWAP yesterday. It might act as support and resistance if the market gets there. No, that VWAP's gone. You only want to be thinking about the VWAP for today when you are day trading. When you're swing trading, it's a slightly different deal, which we'll get into in a little bit. But just understand that the VWAP today is important. Yesterday doesn't matter. So 3 key points on how to think about VWAP. Number 1, you need to think about VWAP as a potential dynamic support and resistance indicator. Now, if you don't know what dynamic support and resistance is, I'm going to leave a link in a video to that below, which covers it much more in detail. But let's just say you were talking about traditional support and resistance, and let's just say that happens to be a resistance level. That is static. It's not moving. Dynamic means that it's moving. So VWAP, as you can see, it's evolving over time, can be a potential support or resistance, and because it's moving, it's dynamic. Now, generally, if you had watched those videos and you had read Investopedia about it, they'll say, oh, well, if the market's above VWAP, it's bullish, and if it's below VWAP, it's bearish. Okay, well, let's take a look at this particular day. Okay, so what you're saying is, oh, the market's below, it's bearish. Oh, it's above, it's bullish. Oh, it's back below, it's bearish. Oh, it's above, it's bullish. Oh, it's back below, it's bearish. That doesn't make much sense. That's going to create a very schizophrenic type mindset around that. And so when you start to understand it as dynamic support and resistance, the most important thing you need to understand is if the market has a history of treating it as support, you keep treating it as support until that relationship changes. And so if it bounces, it goes to VWAP and then bounces and goes to VWAP and bounces, hey, then it's treating it as support. A really good example of that was here. Market gaps open, and after kind of settling after this opening drive, it starts to treat it as support here. You can see it here, here, and here. Hey, the market pulls back to it. It's been treating it as support before. I will keep treating it as support until that relationship breaks. And so it does. You can get a few points off it here, comes right back to it, treats it as support, support, support. I'm going to keep buying until that relationship changes. So dynamic support and resistance, it's very important that you understand as long as the price action is relating to it as support, you will keep relating into it as support until that relationship changes. If it doesn't, you keep using that. Same thing if it treats it as resistance, you keep treating it as resistance until the price action breaks, then there's a change in that relationship. So this is the first key point in understanding VWAP. So I share with you a bullish example. Here's a great example of a bearish example. So the market gaps up and then it just doesn't really, on the opening drive, it doesn't really hold VWAP. In fact, it's more treating it as resistance. Here and here, it sells off. And so for the first few hours, the market is below VWAP. But then it starts to kind of make its way back towards VWAP. And if you notice, the candles are getting smaller and volume is low. Generally, when the market is going to break through VWAP, if it's been below it all day and then it's going to reverse, generally you'll see an increase of volume. And you'll see also kind of the candles are getting bigger and bigger and more aggressive as they attack VWAP. But here, candles are getting smaller, 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 and it's just sitting right here. And there's no volume and it's not able to make it past it. So, hey, this is a good opportunity to treat it as resistance and potentially sell off. And the market, one more candle later on, goes right to it and then sells off, giving you a few points. So those are a couple of good examples of how you can treat it as dynamic support and resistance. Now, another way to think about VWAP is in relationship to how does the VWAP line up with prior days' highs and lows. So in this same example here, look at where the VWAP is lining up. Let's make a nice horizontal line here. And then what do we see here? It's lined up with yesterday's high. So this offers kind of an extra signal going on saying, hey, the market's, bearish. It's been below it the whole time. And then it's kind of fading back into VWAP here. Price action is getting really small. VWAP's here. VWAP's also aligning with the prior day's high or low. Hey, that can also act as a potential signal amplifier to use this to get short. So oftentimes you'll want to see if the market pulls back to VWAP and that just happens to be related to yesterday's high or low, then that can kind of amplify the potential signal when you are day trading it. The most important times that I'm generally watching the price action and how it relates to VWAP is the first 2 hours of the market open. So that's usually the opening drive. I want to see how is the price action relating to it. Is it establishing a relationship to it right off the bat? Or is it kind of mixed on both sides? That's the first thing. Second thing is you'll often get some mid to late day fades into VWAP. And, so if you look at volume profiles, generally and I don't mean volume profile, but if you look at the profiles or the patterns in volume, you usually get a big surge in volume in the beginning and a big surge in volume in the end. And then it's generally U-shape in between. And so volume's usually low in the middle of the day, gets a big pickup at the end of the day. And what you will often see is in this middle portion or later portion of the day, you will often see these kind of fades to VWAP. And if it's usually on low volume, then generally VWAP is going to hold. If you see volume start to increase when the price action gets close to VWAP, there is a potential increase in probabilities that it's going to break. So that's the most important thing. That's kind of that marrying price action, VWAP, and volume. And so those are three general things I'm looking out for when I'm trading VWAP on an intraday basis. Now, when it comes to swing trading VWAP, TradingView has a great little feature that allows you to change it to an anchored setting. An anchored setting really just allows you to adjust the VWAP based on different time frames. So if you don't have TradingView, I'm going to leave a link below here to get your access to TradingView for free. And it's just a fantastic charting platform, one of my favorite charts. I trade off Thinkorswim, but I use my charts primarily on TradingView. It's just such a clean, simple to use, easy UX user interface. And it's so simple and it's so much fun. and I love using it. It's just a fantastic charting platform. So sign up for that below here. But what you can do is when you go into VWAP here, you'll see settings. And then if you look at input, it has an anchor period. Now, when I am trading intraday or doing day trading using VWAP, my intraday timeframes are the 1 hour and below, and my primary day trading timeframes are 5 minute, 3 minute, 1 minute. When I do that, I anchor VWAP to the session. However, when I'm trading it off the daily or the weekly time frame for some swing trades, for my daily one, I anchor it to the week. So this is the daily chart right here, and it says VWAP week. That means it's anchored to the week. And when I trade it on the weekly time frame, it'll say VWAP month. I'm anchoring it to the month. So that's the settings that I use VWAP, whether I'm day trading or swing trading. Now, in terms of swing trading, there's a couple ways that I generally like to look at it. One of the things I'm often looking at is these kind of daily candles that kind of pull back to VWAP. If the market is generally bullish, those pullbacks to VWAP can often represent intraday trading opportunities. You know, the market will sense that, it knows that it's pulling into that will often act as support, and sometimes can create a really good bounce opportunity here. So the market opened, went into VWAP, and then launched higher. Oftentimes, the market can have a really good intraday trading opportunity when it pulls into these higher time frame VWAPs. You can see it again here and here, here and here, often with trend setups. If the market is generally above VWAP, then in that case, I will look for those intraday pullbacks into the higher time frame VWAP for a day trading opportunity or a potential way to swing into a new trade. And it's the same thing on the weekly. Basically, what I'm looking for is these weekly candles that pull into VWAP. If the market's generally above it, then I'll look for pullbacks into VWAP to potentially get long or potentially add on to a long position. And if it's bearish, in this case, then I'll look for pullbacks into VWAP to potentially add to shorts. So those are the general ways that I use it from a swing trading perspective. So to review, VWAP stands for volume weighted average price. It's a staple indicator that you have to use if you are trading stocks. If you're trading SPY or ES or anything like that, you have to be using VWAP. Almost every professional trader that I know of uses it, and they constantly talk about it, and there's a reason for that. Now, don't follow the typical YouTube videos or the Investopedia quotes or anything like that. It's just not really applicable advice. I've given you actionable advice on how to use it here. If you're day trading, you can treat it as dynamic support and resistance. Same with swing trading, you can as well. But if you are day trading, you want to make sure the market and the price action establishes a relationship to it. If it's above VWAP and it continues to pull back in VWAP and treat it as support, you will keep treating it as support until that relationship breaks. Once it does, there might be a potential change in momentum, and the stock might start to reverse that within that day. So you're not just treating it as dynamic support and resistance, you're also looking for potential changes in momentum that often show when the market breaks above for the first time or below VWAP for the first time in that day. That can potentially indicate a change in momentum. And then the other key point is to look at how VWAP and price action are relating to yesterday's highs and lows. If the market is pulling back into VWAP and it's lining up with yesterday's highs and lows, then that can often represent a potential pullback trade opportunity for that day. So that's a good actionable way to use it. I see that commonly that the markets will react to yesterday's highs and lows. VWAP is perfectly there. It just amplifies the signal for me to want to get long or short in that particular moment. And then if you're swing trading, what you're looking at in the daily, weekly time frame, look for those intraday or intraweek pullbacks into VWAP. If the market is above VWAP, and then it pulls back on that day or that week into VWAP, sometimes that can create a good swing trading opportunity to get long in that particular trend. And so that's a really good opportunity to swing trade at positions, or sometimes you can even just do a short intraday trade. Hey, and that candle is pulling into VWAP. I'm going to buy that pullback into VWAP and try and capture a little bounce off of that for that day or that particular week. So that's it. I hope you enjoyed this video. Make sure to smash the like button and subscribe to our channel. It really helps us with the YouTube algorithm. Also, a free promo here. We have a relationship with Webull. Webull is a great stock trading platform. Think of them as a more advanced version of Robinhood. So it's not like super basic like Robinhood, but it's not as kind of sophisticated as Thinkorswim. So a super easy platform to use. And the bonus offer is that if you sign up with the link below for Webull, open up an account with $100, you can get free stocks with them valued anywhere between a couple hundred and $1,400 just for signing up with that link below. So make sure you sign up with that. Super great opportunity. I really like the Webull platform. I think they are a fantastic alternative to Robinhood. They offer a little more sophistication than Robinhood, which I think is just too basic. And so they give you a little more sophistication without being too advanced like a Thinkorswim platform. So sign up for that link below. Other than that, leave your comments on what you learned about this. Have you seen other VWAP videos and found ours to be different? If so, let us know. We really appreciate it. Other than that, I hope you enjoyed the video. Stay positive, stay safe, and stay persistent. There's a lot of great trading opportunities in there. I've been active every single day with a lot of new trades, same as my members here. There's just a lot of good stuff going on right now. So make sure that you're staying aggressive in the markets. It's a fantastic time to be trading. We might not see opportunities like this again in our lifetime. So I hope you enjoyed this video, and I'll see you in the next one.